morning and welcome back to another Tax Tip Tuesday here with Sarah Berry, CPA in Texarkana, Texas. This is our fourth video in our series of tax tips for small businesses. So today we have joining us Keisha Booth. She is a staff accountant here at our office, and our latest staff member, Odis, is joining us today. So today we are going to be discussing a health reimbursement plan. It is formed under IRS Section Code 105, so sometimes you will hear these referred to as a 105 plan, a medical reimbursement plan, a health reimbursement account. It has all kinds of different names. So the particular tax strategy that we will be employing today is shifting otherwise non-deductible expenses and causing these expenses to be deductible. So medical expenses are deductible, but they don't always do us good on the tax return. And the reason why is medical expenses are considered itemized deduction on Schedule A. And with the tax reform, our standard deduction is now $24,000. So medical expenses most of the time don't rise to the level to actually do us any good on our tax return. So you may be out $20,000 in medical expenses for yourself, your spouse, and your kids, but you're not actually able to get the benefit of that. So what kind of tax savings does a Section 105 plan generate? Actually, these can be substantial tax savings. So let's say that your family incurs $20,000 a year in medical expenses. Now this includes health insurance, co-pays, braces for the kids, glasses and contacts for the kids and for you and your spouse. So it's not unreasonable for a family of four to incur these types of medical expenses of $20,000 over the course of a year, and these really aren't deductible on your tax return. So what if we reimbursed these expenses through a properly documented IRS-approved Section 105 plan? What kind of tax savings would this generate? So for $20,000 in medical expenses, you would see tax savings of about $8,600 a year from doing this. So it is very beneficial. So Keisha, now that we know that this is a very valuable tax saving strategy, tell us a little bit more about what kind of strategy this is and what kind of businesses are eligible to do this. Is every business owner eligible to have this plan?
No, it's not eligible to S Corps. It's eligible to Schedule C's, Schedule E's, and Schedule F's, partnerships, and C Corps. But ideally, we would use it for someone that has a Schedule C with the spouse as the only employee.
Okay. Okay, so you said a spouse would be the only employee of let's say a sole proprietorship business. Why would you want the spouse to be the only employee?
Because if you have 50 employees, you have to offer the same coverage to all 50 employees. So if you're offering $20,000 to your spouse in medical reimbursement, you have to offer $20,000 to all the other 50 employees.
Which would end up being a lot of money that you're having to pay out, right? So even if I had 5 employees, I would have to offer it to all 5 employees,
Correct.
Not just my spouse. Okay. Okay, so for the purposes of this video, we're going to restrict our analysis to a Schedule C, who the only employee is the spouse. So, Keisha, can you tell me, for simplicity's sake, could my business just pay my spouse's medical expenses directly instead of having to be reimbursed?
No, the spouse employee would need to pay the medical expenses out of their personal checking account.
Okay.
And there would need to be a formal plan set in place between the business and the spouse, laying out all the requirements of this plan. The employee would then have to turn in their receipts for medical reimbursement and ideally be reimbursed once a month from the company.
Okay, very good. Okay, Keisha, so if I have a Schedule C sole proprietorship business and I employ my spouse, I have this Section 105 plan, and I reimburse them their expenses, is it only my spouse's expenses that I can reimburse?
No, it would cover the employee's expenses, the employee's spouse, and the employee's children.
So
up to
if
a certain
I'm
age.
okay, so if I employ my spouse, I can reimburse their expenses. I can reimburse their spouses, which is my expenses, as well as their children, which is my children. So it's covering our entire family's health insurance and medical expenses.
Right.
Very good. All right, guys, that's all that we have for you today. Thank you for joining. As always, we have simplified this strategy in order to help you understand that it's really not that hard to implement, and it does generate a lot of tax savings year after year, but there are proper documentation requirements with the IRS. It has to be HIPAA compliant and other things that we did not go into detail for sake of not boring you. But thanks so much for watching, and I hope you enjoyed the entertainment that Odis has given y'all. Join us back next week.